Hey, I'm Arch, one of the founders at Taxed, and in this video, we'll show you how you can use Taxed to model your 2023-24 tax return, looking at how you can utilize the next 2 months in February and March to lower your tax bill for the next tax year. Now, in general, having spoken to many of you through the chat, on phone calls and so on, we noticed that we're always looking back retrospectively. A tax return is always looking back at least potentially 12 months or so, up to 18 months in some cases too, which means that we can't make any changes in real time to our tax return itself. But we've enabled the 2023-24 tax year for you. And I've made a separate video on how you can import information across, which will hopefully provide you with the kind of guidance to be able to utilize information from a previous year to speed up this process. But what I've done in this example is I've imported information from my 22-23 tax return, and I can see here that in this example I have a £400 tax bill. I've got income of around £105,000, which in turn means that I lose part of my personal allowance. And this isn't the only time that you can model your tax return, but this is a great opportunity to showcase how different credits, deductions and reliefs will work. So for example, as a landlord, I could think about potentially making a few more repairs and the impact that that will have on my tax bill. I could invest in, as a self-employed individual, I can invest in some new equipment, new laptop, new software and so on. As an employee, I can look at other employment expenses, or for anyone, I can also look at different credits and deductions. And a very common one that we see for individuals earning over 50,000 and especially over 100,000 is that private pension contributions. Things like venture capital schemes as well are quite interesting, or employer schemes. But we'll specifically look at private pension contributions over here, or self-invested personal pensions as well. So I'm gonna, in this example, put in £5,000 into my pension. And you can see that my tax bill has actually changed. It's gone from a £400 tax bill to HMRC to me actually getting a refund of £1,842 from HMRC. So that's a difference of around £2,400. Now, that tax saving is because pension contributions and other credits and deductions, they help to lower my adjusted net income. I actually keep more of my personal allowance. So in this case, I keep the full £12,570, which saves me tax at 20%. But then also my pension payments have increased my 20% kind of basic rate band. So I'm paying more tax at 20% again. So in total, I actually save around 40% of tax, which in turn saves me that £2,400. Now this can be really helpful when it comes to modelling your tax return, because you need to make these contributions by the 5th of April 2024. So this is your opportunity to take a look at your tax return, to have a play around with the software as well. And if you do have any questions whilst you're doing so, or want to understand how something works, just get in touch with our team on the chat, or we can set up more of an advisory call to go through how you can lower your tax bill as well. Thanks for watching. See you later.